You know that feeling when debt is just completely overwhelming, like you're buried and there's no way out? Well, there's actually a powerful legal tool designed for this exact situation, and it's called bankruptcy. It promises a fresh start, but, and this is a big but, that promise definitely comes with a price.
So is it really the ultimate fix for crushing debt? That's the huge question we're going to dig into. Because making a call like this isn't just about the relief it offers. You have to understand the serious long-term consequences it brings with it. So let's break down what all that really means.
All right, here's our game plan. First, we're going to figure out what that fresh start actually looks like. Then, we'll look at the two main paths you can take, Chapter 7 and Chapter 13. After that, we'll get into the stuff bankruptcy can't erase and the true cost of getting that relief. We'll also explore some other options, and finally, wrap it all up with how to approach the big decision.
Okay, first things first. What is the core promise here? What is bankruptcy actually supposed to do? At its heart, it's about giving you a legal way forward when you're financially buried.
So at its core, bankruptcy is a formal, legal process that goes through the federal courts. The entire goal is to give you that fresh start we've been talking about. This happens one of two ways, either by selling off some of your assets to pay what you can, or by creating a brand new repayment plan. Now, the magic word here is discharge. Once a debt is discharged, that's it. A creditor is legally forbidden from ever trying to collect it from you again.
Now, it's not a one-size-fits-all deal. For most people, it really boils down to two different chapters of the bankruptcy code, and each one tackles the debt problem from a completely different angle. Okay, so the two main paths for individuals are Chapter 7 and Chapter 13. Think of Chapter 7 as liquidation. A trustee, who is appointed by the court, sells your non-exempt property to pay your creditors. The upside? It's pretty fast. Your debts are often discharged in just a few months. On the other hand, Chapter 13 is reorganization. With this one, you get to keep your stuff, but you agree to a 3 to 5 year plan where you pay back a portion of what you owe.
So how do you know which path to take? Well, here's the catch. It's not always your choice. To even qualify for that faster Chapter 7 option, you have to pass something called a means test. Basically, it proves your income is low enough that you genuinely can't pay your debts. If your income is too high, the court says, nope, you can repay some of this, and that usually means Chapter 13 is your only real option.
So when we say you could lose your property in a Chapter 7, what are we actually talking about? Don't worry, it's not your essential clothes or the tools you need for work. The court is looking at significant non-exempt assets, things like a vacation home, a second car, a boat, a valuable stamp collection, or a good chunk of cash sitting in a savings account.
Okay, this next part is really important. There's this common myth that bankruptcy is a magic wand that just makes every single debt vanish. The reality? Some debts are here to stay no matter what. And you absolutely need to understand this list. Things like alimony and child support, they're almost never going away. Same goes for a lot of tax debts, or debts that came from you intentionally hurting someone, or from a DUI. And here's a crucial detail. If you simply forget to list a debt on your paperwork, sorry, it doesn't get discharged.
And what about the two giants, student loans and income taxes? For a long time, these have been incredibly hard to get rid of in bankruptcy. It's not totally impossible, but you usually have to file a separate action with the court and prove that paying them back would cause an undue hardship. And trust me, that is a very, very high bar to clear.
Okay, you've gone through the process and you got the debt relief. Fantastic. But what did it cost you? This is where we talk about the long shadow that bankruptcy can cast over your financial life for years and years.
10 years. Let that sink in. That single number is probably the biggest consequence of all. A Chapter 7 bankruptcy can stay on your credit report for a full decade. It's like a giant red flag for anyone who might lend you money in the future. Now, there is a difference between the two types. A Chapter 7 filing can hang around for that full decade. A Chapter 13, because it involves you paying some money back, typically falls off your report after 7 years. I mean, it's still a really long time, but that 3-year difference is pretty significant.
And the damage goes way beyond just a credit score. We're talking about things that affect your everyday life. You'll almost certainly find it harder to get a mortgage or a car loan. Your insurance rates could actually go up. Some landlords check credit, so it might make it tougher to rent a place. And yeah, because this is all happening in federal court, a bankruptcy is a public record.
So, look, given all these heavy consequences, bankruptcy really should be seen as the absolute last resort. Before you even consider going down that road, it's so important to explore every other possible option.
So what can you do first? For starters, just pick up the phone and try talking directly to your creditors. You'd be surprised. They might prefer getting something in a payment plan over getting nothing at all if you declare bankruptcy. A good, nonprofit credit counselor can be an amazing guide. You can also look into debt relief companies, but you have to be so careful to avoid scams. And if it's tax debt, the IRS has its own payment plans you can look into.
All right, this all brings us to the final and most important part, making the decision. And really, it all comes down to weighing that immediate relief against all those long-term consequences and seeing how it all fits into your life.
Let's just quickly compare bankruptcy with another common option, debt settlement. Bankruptcy, especially Chapter 7, can be much faster and wipe out more debt, but that credit impact is severe and it lasts for a decade. Debt settlement might take longer and you're still paying back a chunk of what you owe, but the hit to your credit, while it's still negative, is a different kind of hit.
So if there's one thing you take away from all of this, let it be this. Bankruptcy is not some easy escape hatch. It is a major, life-altering legal and financial tool. It offers a powerful solution for sure, but it's one that will fundamentally change your financial life for years to come.
And that leads to maybe the single most important piece of advice in this entire explainer. Please do not make this decision alone. The money it costs to talk to a bankruptcy lawyer or a trusted credit counselor isn't an expense. It's an investment in making the absolute best choice for your future, whatever that choice ends up being.
At the end of the day, bankruptcy offers a clean slate, but it's a slate with some deep scars that take a very long time to fade. The only person who can decide if that heavy price is worth paying is you, but only when you're armed with all the right information and some professional guidance.